The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 8th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. Let me ask you a question. Have you ever been at a crossroad in life, a point where you have to make a decision? I know I have. When it comes to a crossroad in life, I rely upon the following belief in order to make a decision. When we're at crossroads, it's our opportunity to make the most important decision at that moment. I say, forget our past. The question is, who are we right now, right that very moment when you've got to make a decision? Who are we? And who do we need to really be right now? Don't think about who you've been. Just think about who you are at that moment, who you have decided to become. Make that decision consciously, make it carefully, and make it powerfully. Let's go take a look at the crossroads of the markets out here. Let's start off by taking a look at the S&P 500 right now, trading out at 1550.86. 1550.86, that's not really an important number. The important number was 1546.72. That's the October 11th swing point out there. Friday's session pushed lower. The Bears had every opportunity to push lower. We have, when I talk about being at a crossroad here, well, it was on purpose, because if you take a look at the candles from Friday, or the candle from Friday, it truly is a crossroads candle out here. Why? You got a little hammer that formed on Friday, as well as holding that 1546.72 level. 1546.72, as you know, is the swing point low from October 11, 2007. You had the S&P has been traveling in it for what seems like forever, really since March the 8th when it broke up above that level. We've only had one close, slight close, which was on March 21st, just below that level. That was at 1545.80. That proved to be really not much of a break below. I'm looking for something with conviction. Friday's candle certainly could have been conviction, because there's no reason that the Bears shouldn't have been able to take control and move below 1538.57. That's the March 19th area out there. Instead, what the Bulls were able to do was to come in right about 9:30 or so. It took about an hour for them to assemble their team, hour and a half. Really took till about 1 o'clock to assemble the team, and then march forward into the close of Friday's session. By doing so, created both a bullish and a bearish candle. You don't see that too often. At least I don't see that too often. So you got the hammer candle now. That says that that low of 1539.50 from Friday is very, very important low, because a break below that, and when I mean a break below that, I don't mean a test. I mean a close below 1539.50, and we will see the lows of February 26, 2013 pretty darn quickly out there. I suspect even really come back into that January 2nd level right around the 1462-ish range. Now, it was both a bullish and a bearish candle out here. You also had a bearish engulfing bear sash candle. If you just simply, I'll blow this up on the screen. If we take a look at the body of the candle, we had the bears show up for work right here with a bearish engulfing candle. That was on April the 3rd. They showed up for work on April the 1st with a bear sash candle. And then if we just simply disregard, which you really can't entirely do, but if we just simply disregard the lower shadow, the wick of the candle from April the 5th, this body engulfed the prior body out there. So it really is the fight between the Bulls or the Bears, but it really makes it pretty easy. Bullish is this. As long as the S&P stays above 1546.72, it wants to go at least test the highs. Well, heck, folks, the highs are from April 2nd out there are 1573.66. If the S&P is going to go test the highs, it's going to go tag that 1576.06 1546.09. You get a close below 1546.72, changes the whole tone of what's going on in the marketplace inside the S&P 500, and a close below that hammer candle. So now we have another number to put down on our pad of paper. That's 1539.50 in the S&P 500. Looks to me like the market truly is at a crossroads. Now it's just for us to sit back, pay attention, and watch what the market does before it gives you the next signal out there. Let's go take a look at the Dow. The Dow is trading off about 42 points right now. So let's go take a look at the Dow chart here. As we take a look at the Dow, we're taking a look at the red line going across my screen out here inside the Dow. That is, we're looking at Dow Jones Industrial Average. We're taking a look at that line from March the 15th. That high is 14,539.14. That area also held on Friday. That red line going across my screen, that is an area of support. Right now you're trading just below that level. Now, on Friday's candle, although it looks like a hammer, not enough of a downtrend inside the Dow in order for that to be a hammer candle. What it was a dark cloud cover. How's that for improper grammar? What that the candle actually was a dark cloud cover. That's after creating this little bear sash candle out here on April the 3rd. So you've got some pretty decent resistance up at the highs, which is 14,684. However, no real rejection of this important level. It is important for the Dow to either break above or below the March 15th high out there. Again, that number 14,539.14. That's what I would be watching for as the market comes into the end of its trading session. Now, really, just traveling sideways. In order for the Dow to truly break down, what I mean break down is just do a decent retracement. It needs to get below that March 19th level, and that would be 14,382.09 on the daily chart out there. Let's go take a look at the Russell 2000. Now, the Russell 2000 trading at 922.93. What is all important about the Russell 2000 is the mere fact that has been the weak link in the chain out here. You can see the Russell 2000 made its way all the way down well beyond. The March 19th was right here. March 19th, it closed below March 19th's level on April the 2nd out there. What the Russell 2000 did on Friday is came back and tested that little open window from March 4th to March 5th out there. That level held. That window has not been repaired. What that means is that still is a support level. That support level is 916.69. That's the gap up. You can see the close above that here on Friday's session. Now, if there is a bounce, where could this thing bounce to? Well, first, you've got the top. The real resistance here is the highs out here, which are set up by the evening star, couple evening star patterns out here. One on March 28th. You had another one from March 15th. That March 15th high, the actual candle that formed it, was March 18th. The actual candle that formed it was April 1st out there. But it's really the high of the trading session that would become your area of good resistance. Now, if we just take a look at retracements here, and let's go ahead and take a look at retracements. You got one retracement coming in at about the 618 is 936. The 0.786 level is 943 out here. It'll be important to watch the Russell 2000 because if it only gets to 926.46 and we see the market continue its downtrend, that's important because that would only be a dead cat bounce, a 0.382 retracement. That would be setting up a large A to B equals CD down. I can go ahead and draw that in advance just to show you. I'm not saying this is the pattern that's going to set up. We just got to take things one moment at a time. But if it was only did a 0.382 retracement, this will likely make probably about a 1 to 2 A to B equals CD down, taking into that January 2nd to December 31st breakout level. That's where the markets do want to pull back to eventually out here. I don't know that that's going to be today. So we'll watch be able to watch weakness out here. Now, as far as candle formation, no bullish candle formation out here inside the Russell 2000. However, if I go over to the index futures, there is a bullish candle. So it's important to really tie, in my opinion, it's important to be able to tie the two together here, and that's what I'm going to do for you. We're going to put up the Russell 2000 futures contract, and that did make a hammer candle. So in watching the Russell 2000 futures, you want to be paying attention to the level of 907.20. You break that, you're long, you're wrong. Of course, support becomes the Morningstar, which is down at the February 26 lows of 892.60. I suspect, though, because this would be weak and because of the retracement, if you break it, I expect you would see this area hold just for a short period of time before it resumes all the way down to that January 2nd level. So that is on the Russell 2000. Let's go back to the indexes out here. So we took a look at the Dow, we took a look at the S&P, the Russell 2000. That leaves the NDX 100. Well, it leaves more than that, but let's just go peek in on the NDX 100, and let's go see how that is performing today. The NDX trading out at 2770. Really right now just a little sideways day. If we take a look at what the NDX actually is doing, so it looks like this point 786 Gertley is starting to take place more and more each trading session. It has been the NDX has been traveling sideways going back to the March 5th time frame. But if we take a look at that window, not yet repaired, so it means it still acts as a support level. We'll put that in black out here. That is the gap up from March 4th. The top of that is 27 from the March 4th candle is 27.5984. You can see price. The bears really had every opportunity to truly crush and move all the way down to the real level of support, which is the January 2nd area. Actually touched the January 2nd area. The January 2nd high in the NDX was or is 27.4650. Price actually got down to a low on Friday of 27.4426, rejected that area and as well rejected this open gap out here. So this is still support. So number of levels of support here inside the NDX, but looks to me like this wants to give up the ghost here. So the NDX and the Russell are the two that are the weakest out here, just simply with regard to the Russell, because of its price pattern that it has displayed inside the NDX, because, let's face it, it hasn't been able to get over the September highs out here. It's only been able to make a .786 Gertley sell pattern out there. That's on the NDX. Let's actually go take a look at the composite, the New York Stock Exchange. Let's get a little bit wider swath out here. So let's take a look at the composite. Let's go see what that is doing. Here we go. We've got the composite. We know that has formed a three drive to a top pattern. That is a reversal pattern. And inside the NDX, not only is it giving you a reversal pattern, it's also giving you reversal candles. Up at the highs, it's giving you bearish engulfing candles. What the composite also did is this is a little hammer candle right here from April 4th. And so what did Friday's action do? The low of that hammer candle is 320602. You're trading at 3197 out there. Friday's close was at 320386, which was still below the low of that hammer candle session out there. So the composite here has broken a hammer. Let's get rid of some of the things that are on this chart here just to make it a little bit easier for you to read. Let's get rid of this Fibonacci level. Let's get rid of the cycle bars. Those were nice out there. Let's get rid of the formation tool out here. So let's just delete those items off the chart. There we go. And now let's take a look at, we can see the composite also came back into that March 4th gap. That level has held as a support level. But on this three drive to a top pattern, as far as a real retracement here, you would be taking a look at a minimum of getting back into 3,062. That's nothing more than a dead cat bounce. But what this really is suggesting is 2934 level. That is the .618, and that takes you all the way back into November 23rd, 2012. Well, that would take you all the way back into Thanksgiving. Right now, we've got the Dow is off 65, S&P is down 4.5, composite is off 8. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow's off about 60 points right now. S&P still down 4. And let's just go finish off the taking a look here at the indexes. Let's take a look at the New York Stock Exchange. Friday's session here was a test of the high of the gap from March 4th to March 5th. Tested the low of the March 5th candle, which was 9,057. That area here now is acting as support. You had your first test. You like to see at least 3 tests in order to be able to really confirm that that is a strong support level. No bullish candles, however, showing up inside the New York Stock Exchange. Still more bearish candles to the upside on the NYSE. If that gap gets filled, says your next level of support ends up being February 26th, that whole set of swing points inside the NYSE. That would be about 8,700 and a little bit of change out there. Let's go take a look at the transports. The transports here giving you a little bit of bullish signals here on Friday as it was moving lower. Let's go take a look at the transports. It formed a hammer candle out there. That hammer candle, now we know that the transports had a hammer candle on March 27th as well. That low was 61.18. As soon as we got to close below that, said look out below. We'll just take a look at where it traded into. It traded right into this Morningstar candle formation, so all the way back into that February 26th time frame before the bulls stepped in. It didn't get all the way down to the bottom of that swing point, that February 26th area, but still, that is, you want to be able to utilize the candlesticks to identify places. This is nothing more than a battle on a stock chart. It's like playing the game of, it is playing the game of Risk out there, and only in this case here you get to step back and you get to really see what the other side is doing. So it's an even easier game to play. And so once you've identified the lines of support or resistance, you know where the battle, where the warriors are at. In this case here, from a bull standpoint, you've got the warriors in that February 26th camp area, and those folks were able to fend off the bears on Friday, forming that hammer candle. Now what that says is on the transports, because it's so close to the evening or morning star candle formation back in the February time frame, a close below 58.78.12. That was a low from Friday's session. Says, you got a little bit of junior support right here at the February 26th level of 57.89. I suspect, though, just any close below that hammer candle, that spells real trouble. Now, real trouble means inside the transports, it'll take you all the way back here, most likely into the time frame here of January 2nd. I mean, that's really the next move. And the December 31st swing point low is 52.10 out there. So that is on the transports. Actually makes trading the transports, having those hammer candles, to me, I think it makes things a lot easier. Now, in the case of the transports, because, like I say, so close to the February 26th level, a true break of both of those, and you will see the December 31st, January 2nd time frame in no time at all out there. Right now, no bullish, no bearish candle, no confirmation, certainly, of the higher move on, not the higher move, of the hammer candle, and it was a higher move than the Thursday session inside the transports. Let's go take a look at what's going on over in the commodity sectors here. Let's go take a look at gold. We've got gold now trading down. It's trading out at $15.73. That is off about $2.40. So no great shakes out there. Gold giving a potential reversal signal out here with this nice big bullish engulfing candle that came in on Friday. It engulfed the prior two sessions. That was a session from Thursday as well as Wednesday out there, giving a little bit of its gains back. Let's go take a look at the shorter-term chart here. Let's take a look at the 10-minute chart inside gold. Look for 1563.60. That is going to be an important level. You saw gold break out, most certainly as we took a look at the daily chart inside gold, but that was all done between 8:30 and 8:40. All the volume inside gold came in right then and there. Big spike, nice wide-ranging bar, went from a low of 15.53 all the way up to 15.63 out there. So in one 10-minute swoop, and if I went down to a lower-term time frame, you'd get even the same type of picture, maybe a little bit bigger picture. But we'll use the 10-minute chart out here. And so 1563.60, I would look for that to be the first test to see if that's where the bulls truly are hanging out inside gold. You get a close below 1563, then the next level of a test is going to be the low of that session, which would take you down to 1553.10. So that is on gold. No real volume or anything right now out of the gold contract, but that's what it is that I would be paying attention to. Actually, that's what it is that I am paying attention to, and so that is on gold. Let's go take a look at silver. Silver not giving you as nice a signals potentially as a reversal as gold. If we take a look at silver out here, well, we're going to have to do that when we get back from the break. 877-927-6648. Moving to the upside, you've got Lufkin Industries, Intuitive Surgical. Well, that shouldn't give you bulls a lot of pleasure out there. That's the second in the clubhouse. Google to the downside off $11, Netflix off $4. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 50 points, S&P down a couple, and we were taking a look at silver before we went off to break there. Silver on Friday forming a bull sash candle out there, so the bull's showing up for work as price was trying to break through that descending price channel. That's that little diagonal set of blue lines if you're watching us on Tiger TV. Today trading off just a bit, trading down at 27.15. I like the pattern on gold at this moment, more so than what I have seen here on silver. You would like to see silver actually get down and test the swing point low back in September 26, around $26.15. If it can do it on, the ultimate test would be less than 32,000 contracts. But really, as long as it is less than 104,000 contracts out there, it should act as a pretty decent bottom and a nice consolidation range as well. $9.29 consolidation range out there on something in the $26 price point. That is a heck of a nice move. We take a look at natural gas. Natural gas here is threatening to break above the 1.272 butterfly pattern that we're taking a look at here on Tiger TV. That would set up a move to the top of the rising price channel out here. So right now trading out at 416. Nothing really huge in the move. I think it needs to break out a little bit more than this to truly be above a 1.272 butterfly expansion pattern out there. But nonetheless, Friday's action was big. He had a wide-ranging bar, closed at the session highs, and today trying to have a little bit of follow-through. Light sweet crude here. Light sweet crude pulling back on Friday with some volume in this, moving back into the 0.618 retracement. No bullish candles in store here just yet. Right now, looks like it is the, let me see which moving average this actually is here. Give me a moment here to put this up on the screen here. That is the 200-day moving average. So right now you've got light sweet crude trading into the 200-day exponential moving average. It's trading out at 93.18 right now. Looks to me more like what is the likely scenario here, as opposed to that 0.618 retracement, is more like a 0.786 retracement, which would take light sweet crude right into the bottom of this rising price channel. There you might want to take a look at putting on a trade, and that's going to be right around the $91.14 area. So just be patient. And wait to see if, and what you'd want to do is wait for a bullish candle before you would step in front of that train, because you don't know if that's a light at the end of the tunnel or if that is a train coming at you. So wait for the bulls to step in if you wanted to take a long position. Bonds here, bonds broke out of that consolidation range, a short-term consolidation range, because it only goes back to the beginning of the year, January 2nd. Nonetheless, what bonds want to do is finish the move, which would be how about that for language? Which would be to get up to about the 149-ish level. They got as high as 148.09, so pretty close. Another point out there would probably finish off the pattern out here. No bearish candles in sight here, at least on the daily chart just yet. That candle there is nothing more than a resting candle. That is in bonds. A quick peek around the world here. Let's go in. We looked at the Nikkei earlier in the last hour. Let's go take a look at the DAX. Now, the DAX had completed a 1-to-1 A to B equals CD down, and we were looking at that on Friday because of how the DAX has moved off of that swing point. You're certainly not seeing any bounce in its step here this morning. The DAX wants to trade lower. Close the window from March the 4th to 5th. Should make you say, something to think about, because as we take a look at the U.S. markets, we've been paying attention to that March 4th and March 5th level as well. The DAX wants to make it at least all the way a 1 to 1.272 A to B equals CD. That takes it down into that February 6th time frame. So you can see how these markets, when we take a look at dates here, how they're picking up with what's going on inside our markets as well. Let's go peek in on the FTSE here in the UK. Let's go see what that is doing. The FTSE had formed a 1.618 butterfly pattern. Now it is already trading down into that February 6-ish, February 7th time frame. It's inside that candle. The low has not been, it was tested on Friday. I take that back. So the low of February 7th was tested on Friday. That was 62.16. It held, but I can see the price will be, it looks to me like price will be back down there pretty quickly. Where the FTSE in the UK ought to travel to, if we just take a look at coming off of the lows from June 4th, all the way up to the highs that were put in here and established on March 15th. 6,035 is the first area. That's a dead cat bounce. It's a 0.382 retracement. More likely 57.27, which takes us back into the November 23rd time frame. Takes you all the way back into Thanksgiving. So that is on the UK FTSE out there. Let's go take a look here at our ETFs. Haven't looked at the ETFs, so let's go do that. Let's start off by taking a look at the SPYs, see what the SPYs here are doing today. Trading out at 155.03. The SPYs here are still, they're just trying to get back inside this little rising price channel. So the SPYs break out of it on Friday, get down into the March 5th candle, get into the March 19th candle, which had 167 million shares. Friday, 159 million shares, so not enough to truly bust it down. 121 million shares at March 5th, but really it's that March 19th candle that you should be benchmarking the volume against. So needed a little bit more volume. Still has that support level, horizontal support, which is the March 5th level. And right now today, we'll see if it can get back inside that little rising price channel that's coming off of the lows from November 15th and 16th out here. Again, just using the body of the candle. So as I blow this up, you can see how really Friday all it did was get back up and test that level. So it's going to be important today for the SPY to get back inside that price channel. That would set up a more likely run to the highs. And in the case of the SPYs, just like in the S&P 500, a test of October 11, 2007. The case of the SPYs, that price point is 157.52 out there. But right now, struggling to get inside that price channel. We take a look at the Dow Diamonds. Now, no bearish candle formed inside the SPYs on Friday. So just simply was a candle. Let's go take a look at the diamonds. They're trading out at 144.93 right now, still trading inside its rising price channel. What the diamonds did do, unlike the index, and I would pay attention to the index more than the ETF, the diamonds did break that March 14th swing point high out. I'm sorry, March 14th? March 14th swing point high. That level was 145.35. And the volume that was there on that candle was 5.3 million shares, 7.3 million shares on Friday, but still was unable to close above that level. So trading below it has some support here at this bottom of this blue line. Can't really give you what that price point is. I would say use March the 19th. So let's just go back there. March 19th would be 143.48. That's what you would be paying attention to. Right now it's trading inside that candle, I believe. Let's see, 144.83. No, just above it. 144.83 is the high from March 19th. That's on the diamonds. Let's go take a look at the IWM out here. As we take a look at the IWM, no bearish candle on Friday, no bullish candle on Friday as well, unlike as we took a look at the Russell 2000 futures contract, which had that nice hammer candle. Now, what the IWM has been doing is really pecking away at that March 4th gap up. That level, 91.17, actually was a close just slightly below that at 91.13 on April the 3rd. I gave it the benefit of the doubt of that still acting as support. And what we can see here inside the IWM, that level acted as support on Thursday, got down to 90.96. 37 million shares coming into 35, so it's coming in with volume. And even on the April 3rd, 65 million shares. But you can see here, even though coming in with volume and trying to crack that, the bulls really trying to defend their position inside the small caps here, inside the IWM. And even again on Friday, getting down to 90.42, but closing out at 91.73. So that area is still acting, that area being the gap up, being the March 4th candle, being the high of March 4th, and that level again, 91.17. Has not tested that today. Look for another test of that. You get a close below, and I mean with conviction. I'm not talking about $91.13 on a 91.17 number. I would say real conviction to the downside would be a break of that candle altogether. So a close of 90.20 out there. But right now you've got some support inside the small caps. Where could they bounce to? Well, in the IWM, any bounce here, I would be taking a look at having it test the the rising price channel. Broke out of it, hasn't really tested that area, so that's where I would be paying attention. On the IWM, if you take a look at retracements from high to low, what we would take a look at is that rising price channel is right around the 0.786 retracement, so somewhere around 93, 99-ish. Would be the range if, in fact, it can get any traction. So far this morning, no traction inside the IWM. No bullish, no bearish candles really having formed here the last couple of trading sessions. That leaves for us good old Qs out here. So let's go take a look at the Qs, see what they are doing right now. Trading out at 67. 76. Gapping down on Friday, gapping down into the gap up that was created on March the 4th. The high of the March 4th candle, 67.69. We can see that level really is acting as a strong support level inside the Qs. The market was able to push its way up and close at 67.86. And the number for support was 67.69. So that level still is a support level, but big volume out of the Qs as it gapped down and pushed down. That says that the Qs really do want lower price. They're just trying to crack this area. The next level of support inside the Qs will take you back to February 26th, and then once it breaks, and really the level of support that you're really focusing on and paying attention to is January 2nd. That is 66.48. Close below that, most likely we'll set up a run down to the December 31st level. But because the Qs are so weak, because the IWM is so weak out there, I suspect that not only will this come back to December 31st, could easily come all the way back to November 16th's lows, 61.31 to 62.48. But one step at a time. You got to take this one step at a time. And right now, the support level is holding. That's the support level of $67.69. The Q is trading out at 67.71 as we speak. So that covers the ETFs. Let's go take a look at some of the sectors here inside the S&P 500. Let's start off by taking a look at the XLF out here. As we take a look at the XLF, this is trading out at $18.02. The XLF here, has been the strong hands inside the S&P 500. It is continuing to use as a resistance area that 9-period EMA. Basil Chapman, Johnny Cash, walk that line. 9-period EMA right now measuring out at 18.09. This is trading at 18.01. You had the XLF get down below the gap. Let's actually get rid of this candle here. Let's blow this up. Let's put some new lines in here. We're going to check out this line of support inside the XLF. We're using the candle session, the gap up, of course, from March 4th. Volume there, 36 million shares. On the following day, 66 million shares. The pullback on Friday was 59 million shares. So even the XLF needs more volume to the downside. We can see the bulls came in, defended their position here inside the XLF. That is still a support level, which is the high of March 4th. $17.80 out there. No real conviction, though, to the upside. No bullish candle formation or anything here just yet. Next level of support, like in all the indexes, February 26th would be that on the XLF. That's at 17.16 before it decides to take on the January 2nd level, somewhere between 16.88 all the way down to a low of 16.11, which is December 31st. Let's go peek in on the energy sector. Let's go see what's going on inside the energy sector. So we'll take a look at the energy sector, which is the XLE, see what that is doing this morning. Then we'll go take a look at the technology sector. As we take a look at the energy sector, what we have here is trading in. So the energy sector broke inside that September 14th swing point, which is important. The low of that swing point on September 14th is 76.02. On Friday, you had the energy sector actually get down to 75.99, 16 million shares, going back against September 14th with 15 million shares. Also coming in to the February 26th level with 17 million shares. So still not enough to break it down, but the energy sector is weak out here. And that will be, one of the sectors that you might want to take a look at a possible short position in the case of the market giving us a real nice clear signal out here. And certainly on Friday, there was not that clear signal because as we were taking a look at, we're seeing lots of rejections of normal places of support, but coming back with volume. So it says that you will be back down there. Right now, what would be nice is to see a nice little Gartley sell pattern set up in at least in the ES Mini. That would be nice. I'm going to switch back over real quickly to the ES Mini. Let's go take a quick peek of that. Seeing a little bullish candle here on the 30-minute session. So let's get what we were looking at. We were looking at the retracements here, folks, off of the low from Friday morning at 9 o'clock. 15.33 and a quarter to the high that was put in coming into 8 o'clock this morning. Right now, all that we've seen is a little dead cat bounce, a little .382 retracement, took into the 15.45 level. You're trading at 15.48 right now. You see the bulls here trying to step in. Maybe this will make an A to B equals CD down, a small little one, taking you back into that 15.40 level. If this is the only retracement that is done inside the ES Mini, though, the A to B equals CD pattern. This will do more than a 1-to-1. This will more likely do a 1 to 1.272. That'll take you all the way back up to the highs, going back to April 3rd. 877-927-6648. Dow's off 35. S&P is down 30 cents. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's go finish off the, we were taking a look at really the top three sectors out here. Let's look at the technology sector, XLK. On Friday, gapping down below the gap up from March the 4th. That had at 12 million shares. That's really your benchmark. That is the March 5th gap up. On Friday's session, only 7 million shares to the downside. Nonetheless, we now have an area that really should have acted as support, really should have been that high from March the 4th, which is 29.78. Now that area is acting as a resistance line. Actually, on Friday, XLK got up to 29.78 exactly, closing out at 29.73. So far, intra-session today, also getting up to 29.78. So that area looks like it may be acting as a resistance level. And, of course, what the XLK has really been doing is consolidating sideways here ever since the move up off of January 2nd. So good support at the, right around on the XLK, right around $29.19. Right now traded at $29.69 out there. Let's go take a look at a couple stocks here, popping and dropping. Let's check up on IBM. IBM putting some weight to the downside inside the Dow. Dow's off 38 points right now. And IBM on Friday gapping down. And where IBM likely will travel to, it's already traded into the swing point here from March 5th. March 5th is just simply an area where we had the market gap up. I'll go ahead and put the crosshair across. Actually, we'll draw a line across here, which is coming off of the high, which was 207.70, 3.8 million shares. So on Friday, coming back with 4.1 million shares. That level is holding. I would expect the real test, though, is going to be the bottom of the March 5th candle. We use a black line for that, and that is the open window in between the 4th and the 5th. So you're looking at a window from 205.69 to 205.19, and that is where IBM is at least headed to. Now, what it actually did here could be a small, let's see, this swing point 3.7 million, 4.1. So we can draw a little A to B equals CD down as well. That would be coming in off of the high from, let's see, March 20th was 215.82, 215.86. So March 14th, we use that as our high, as our A point. The B point is the March 28th low, 209.74. The C point out here, you can see it completed a 1-to-1 A to B equals CD on Friday. But look at that move off of the C point here. We'll pull this over to the left here. And so coming down with some decent volume. Clearly, it actually came down to the 1.272 A to B equals CD. Looks to me like it wants to make a run all the way down to the swing points here. Yeah, it should really come down to test this. It should find good support right here. Take a look at this breakout in IBM on January 23rd. That is where it is headed. If you take a look at that volume, good volume, 12.5 million shares. Don't know if there's anything special going on January 23rd. I don't think that was a rebalancing day. But that is where you've got volume in IBM, 12.5 million shares. That's your 1 to 1.618 A to B equals CD. Real quickly, let's go peek in on LinkedIn. Notice that is to the downside this morning. I don't know if there's really any big volume out of this equity. This has been a strong-looking stock chart here. Don't know why my candles look like that. Let's make those green and white. There we go. LinkedIn trading lower this morning. LinkedIn has you'd love to see LinkedIn come all the way back to the February 8th breakout, which would be around the 151.89 to 140.13. That would be if it's coming back there on some nice volume, that might be a nice way to get into LinkedIn. Folks, stay tuned. Basil Chapman is up next. Then we've got Larry Pesavento. After that, we've got Daryl Martin, David White, and Tom O'Brien show from 4 to 6. Have a great, marvelous Monday, folks. I will look forward to seeing you in the morning. Take care.